welcome to the closing beat, everybody. Happy Thursday. How you doing out there? Hope you're having a good day. Welcome to our show. Just a quick stock market update show. We like to go over everything in the stock market, so we'll be sure to cover that with you here today. Also, we're doing a research site. I think it's going to be up next week. Just putting it out there. I think it's going to be up next week. If you want to know, you can go over to our website there. Check it out, jazzwealth.com/research. It's not actually on our homepage just yet, so you got to go directly to that link. You can see the type of stuff that we're going to be offering there, a lot of the data and sort of things that we share on the show, just in an expanded way. You can also see down here, you can put your email if you'd like us to let you know when it is ready to roll. We'll send you an email, just one email to let you know that it's out there and available for you to check out. That's all I have for that. Let's go over to the stock market today. We had a late day rally in the stock market, which is why you see positive numbers on your screen. The media is going to say it was all banks. However, I can prove to you that it was actually everything that sent the markets higher on the day. So we'll take a look at that. It was really right at the end of the day, about 3 o'clock. I drew a line so you could take a look and see. They said, oh, the banks took off, so the markets moved higher. But actually everything together, this is every single sector in the stock market moving higher at the exact same point. Good news, there was really no news headline or anything. It wasn't anything that came out or somebody said something. It was just that every sector started moving higher. Maybe a little short covering, people that were kind of playing around there over the last couple of days. I don't know. I found it interesting that banks did lead the way. We'll cover that in a second. And then at the end of the day, right after the markets closed, the Fed came out and said, hey, you know what? We're going to limit the dividends that banks can pay. So they came out with bad news, man. They waited until the markets closed. They didn't ruin the rally. You could say that was either kind of nice or maybe that was kind of rude that they did that. So banks all a little bit lower here after hours. Early today was virus-related pressures. We're going to talk about that in a minute. I'll give you some of the stats on the virus stuff going on. But that's basically what you have, at least for the major kind of news and things that happened throughout the day today. If we go over to the stock market and take a look, we'll look at the major indices here to start. You got the Russell 2000. Did well. Was the best one today, really thanks to the late day rally. However, it's not the best overall. Just today had a good day there. Got a couple of upgrades in the small cap space from some analysts out there that were telling their clients, go out there and buy some small cap stocks. Their words, not mine. And so that Russell sticks out. You got the Dow, also kind of interesting today. A little recovery off the lows, as you can see there. You got about a % gain on the day thanks to bank stocks. Really, I mean, it's true. Bank stocks. Goldman Sachs looks the best out of the group, up 4.5% on the day. I thought I'd point out JP Morgan. That one stands out a little bit too, a little bit of a rally. We've been talking about that bounce off of the uptrend. I'll cover that for you guys in just a moment there. Intel was a little bit of a drag today. However, back to the 200-day moving average and finding some support there in the short term. You can see that with that tail here today. Not looking too bad there. From highs down to the lows here, if you look, well, how much is that? I think that was that 8% from the highs to the lows? Over the last month, it's down about 6%. From highs to lows, you got just over a 10% pullback here. So those of you that have been looking for a discount on Intel, that's what you have. The NASDAQ goes back to positive for the week after being kind of choppy sitting up here at the highs. It's up 11.6 year to date, 11.6%. That's the only index out of the four that's positive, by the way. Biggest contributors in that one today are going to be Apple. A little bit of a reversal there, 1%. And then Microsoft. There you go, Microsoft. Moving a little bit higher as well, 1.25%. The S&P trying to get back to positive for the year off the 200-day moving average, just chopping around. It's choppy back and forth type price movement there, at least over like the last 7 to 8 days there. Interesting fact for you here today in the S&P 500, which we're going to dissect into little groups in just a moment. In the S&P 500 now, over 3/4 of the S&P stocks, chances are you got a 3 out of 4 shot, 75% chance that if you pick a stock, it has a higher dividend yield than bonds, in particular the 10-year, which is pretty historic if you want to look at something like that. All right, let's take a look. Stock market today, we had the jobless claims come out. We'll go over here. We'll come to that in a second. Here's the initial jobless claims down for the 12th week in a row, just barely. So the jobless claims get to survive the curse of the 11 number that we've talked about there. Dropping down there a little bit. What's more interesting is continuing claims. That's what everybody's focused on here. Slight decline. It broke back below the 20 million mark. That's still a lot, though. It's just a lot. I can't believe the market shakes this kind of news off. That's very, very impressive there. I mean, as far as the size of the number. But sort of good news that we're dropping just at a slower pace than we've seen over the last couple weeks. So not ideal, but I think the market says we'll take it for now. Who's going to be the president? Let's take a look at that. Anyways, okay, let's move on here. We're going to take a look at something interesting before I dive into the sectors. We're going to look at the S&P 500. The question is, the S&P 500 seemingly getting a little bit weak, but what is getting weak? How do you analyze the market? There's 500 names, technically 505 if you count all classes of stock. 500 names in the S&P 500. How can you figure out what is doing well and what's doing bad without scanning through every single stock out there? Well, I'll give you a way to do it. It's not the easiest way, I'll admit, but I'll do it for you today. So we'll take a look. What we're going to do is we're going to break the S&P into little groups. We're going to put 50 stocks into each group. Now, how do you choose the 50 stocks that go into each group? So here we've got 10 different groups, each with 50 of the S&P 500 stocks inside of them. From there, we're going to say, well, how we choose them is based on our criteria. So for example, we took this and we said, all right, we want to bucket the S&P 500 into groups of 50, 10 different groups by the amount of debt relative to their assets that they have. In other words, the most leveraged companies out there in the S&P 500. Well, if you look over the last little time period here, those that are performing the worst have the most amount of debt. So that already helps you zoom into about 100 stocks. Pretty simple right there. If you're saying, okay, who's performing the worst? Those with a lot of debt, and you can understand why those stocks might be doing poorly. Those with the least amount of debt, Microsoft being an example, not falling as much when the markets fall, only about 5% there. The next thing we did is say, well, we want to funnel that down just a little bit more. Let's look at them by their valuation. Trailing PE over the last 12 months is what we used, if you're curious. And we bucket them. Those that currently are the lowest valued or the cheapest stocks out there, not by price, by valuation. The cheapest stocks are falling. So you have those with the most debt that are the cheapest out of the group. They are in the bottom 10th or the bottom percentile, right? In other words, it's a decile analysis. I wasn't going to go that crazy, but you get the idea. These are 10 different buckets of 50 stocks bucketed by how cheap they are to how expensive they are. Those that are more expensive, they're not falling as much. People are chasing higher valuations right now, and they're selling the lower valuations. And that's kind of obvious to see. If you've been around for a few days, at least you've seen that. Next thing we did is we said, okay, how about size? We want to see if the bigger companies are weaker or the smaller companies are right in the middle. What's going on? It's almost the exact same picture. You have the smallest companies being sold off there. In other words, the cheapest companies with the most amount of debt that also are the smallest are the ones that are getting beaten down on down days. That's the highlight, the short Cliff Notes version of what we're trying to talk about. And I just thought that was kind of fun. That's the kind of thing we're going to be sharing in our research site if you're interested in that. Actually, that is the dojo. I'll show you that in a second. But that's the kind of thing that we're going to be talking about there in our research site. I already showed it to you. Doesn't matter. We don't need to see that again. So that is what you have there. Moving on, we're going to go over to virus. Here's the virus cases. You're going to see this in the news. I'm sorry you're going to see this, but we have hit a record number of new cases per day. Just talked about this yesterday. If we just added another 3,000 a day, we would be at new records all over the news and media. You're going to see this is now the most amount of cases that we've seen per day in the U.S. there. And you go, well, dude, the test counts are higher, right? I keep hearing people say that. We're testing more and more people, and therefore you have more and more cases, blah, blah, blah. Yep, you can't blame it on that now. Check it out. The number of test counts is tests per day, by the way, that are being administered are actually declining. So we have less cases being administered, but we have more cases overall. That's a sign of the virus spreading. That's not some sort of math tricky thing that they can do on TV to make you feel like all is actually okay. Because of that, you got Disney postponing Disneyland's opening. You've got Apple closing stores, at least here in Florida. I think some other state as well. But some of the main stores all around here in Florida, they are reclosing, actually. And so that's what you have going on with the virus. It's not pretty, right? It is not pretty overall. If we take a look at our FinTips videos this week, we did REIT ETFs, how to choose them based on volatility. You might want to check that out on our YouTube channel. Yesterday was when to sell a stock, in particular relating to your stats. Tomorrow, we're going to go in more detail. Our FinTips video will expand on that for the stats. Tonight, for our customers, if you are one of our customers, by the way, and you've never joined us, you go on over into the dojo here. The video will be up here. You can join us live, actually, and there'll be a red button up here at the top right that flashes, and it says, hey, we're live. If you want to come and join us, we're live. And you can actually come and participate there if you're one of our customers. Tonight, we are going to compare this stock market to other stock markets that are the most similar. Going to get a little geeky on you. Just hang in there. I'll show charts. We'll make it nice and pretty so it's easy to understand. But we're going to dive into that. And then we're probably going to have a discussion about your taxes and how things are going forward there. On Monday, by the way, our FinTips video, if you like the geeky stuff, right? Do you like the geeky stuff? Somebody? If you like the geeky stuff, we're actually going to make a non-opinionated decision. That's my bad. We're going to make a non-opinionated sort of analysis of, is it better to buy a home when prices are lower but interest rates are slightly higher, or is it better to pay more for a home, like homes are more expensive now, but we have lower rates? Which one's better, and specifically, where's the break even there? So those of you looking to buy homes, we're going to take the opinion out of it. We're going to go into some really cool geeky stuff. All right, let's go to the sector breakdown overall and take a look and see what we've got going on. Not a whole lot. I'll tell you why. Let me start with the banks. We got banks reversing today, looking pretty good. We talked about that yesterday, bouncing off the uptrend line there. Regional banks almost, but they reversed ahead of time, a little bit ahead of schedule there. Volcker rule, they've decided to ease some of the restrictions there. The fancy way of saying that is that banks will now be able to invest in other things that they previously were not allowed to invest in. So if you don't want to look up the Volcker rule, that's basically all that really means. All the banks were higher today. JP Morgan stands out, in my opinion. Goldman Sachs stands out as the best performer, back above the 200-day moving average as well. Wells Fargo is the underperformer, not only in the short term, but also the long term if you're looking at this stock. But it was up 5% today, so that was kind of good to see. We'll move over to utilities there. Utilities a little extended here in the short term, and people starting to see that today. See that little bottoming tail right there? Got a little bottoming tail forming there. People that were saying, okay, that's too far in the short term. If we look here over the short term, you got over a 10% decline just in the last couple weeks. So it was a broad decline in the sector today. There was quite a bit of losers in the sector that lost more than they normally do, so above average declines today. But by the end of the day, things sort of started to recover. If you look at Nextera, same thing. Sold off, extended in the short term, back to support. People saw that today and started bidding that one up. And then if you go to Southern Co., same thing, but not as much buying there. These were the biggest laggards overall. Take a look at gold real quick. There it is. So gold hovering around that breakout area, down $4 today. 1770 is where it landed. Not too big of a deal. Sort of an off day for gold. Oil, a little bounce today, up 2%. 38.75 is where the price per barrel closed at. The issue with the sectors today is that they're kind of all sloppy. I'm not going to go through all of them because they're just kind of a mess. Tech, we've already been through. You can see how it's, in the very short term, very undecisive. It's in an uptrend. We all agree it's strong. It's very undecisive. Materials, kind of choppy here. Wild volatile range. We don't have any sort of clue yet whether the uptrend is going to continue or this may start to chop around or even get weak. So a little bit tough there. Going outside the sectors, you got transports, nice pullback, but are we going to bounce? Because when you look at things like energy, oil, well, mainly energy. So I'll use the XLE to show you this one here. When you look at things like energy, they pulled back, but then every bounce has been sold into. So you have a bit of concern from the short-term traders going, I'm not going to look at this sector. I'm going to go elsewhere. Where can I go that's actually active right now and doesn't have one of these sloppy short-term patterns there? That's what people are looking at there in the short term. Actually, if you go over to the dojo, just type this in, candlestick. You don't even have to type the whole thing. If you go in there and then you type in candlestick, right? Here you go. 3 classes there to kind of go over this if it's something you want to take a look at for the dojo overall, and if you want to learn. But so because of that, I don't have a lot to cover in the sectors today, so I'll move on to our technical breakdown for the day. Let's see what's going on over there. You got 5 new highs on the day. Accenture is going to be earnings related. New 52-week high, obviously, kind of a real sloppy break out there, but really strong day and closed near the highs of the day on above average volume. Technical traders like that. You got T-Mobile hitting new highs again. Volume's been high here, even despite SoftBank's decision to sell some of their position. So that's okay. McCormick, you guys know this. Everybody's got some McCormick in their house there. New 52-week highs, above average volume, very strong. In fact, every stock on this list today gained more than 2%. So strong, right? Just a couple names I want to point out seem kind of interesting. No new 52-week lows, and so that takes us to a few different stocks I'll point out. ConAgra is a watch list item. We've talked about why this is on the watch list, the breakout potential there. So that's that one. Transport companies, CHRW, not really doing anything yet. We had one good day of a bounce, so far kind of going sideways. You notice the theme in a lot of these stocks, a lot of these sectors, a lot of these indices, they're going sideways like the S&P. So it's kind of difficult to find momentum at the moment. Cabot Oil pulling back below the 200-day. I don't think you rule this one out yet. Pulled back a little bit more than expected. Volume was average, so it wasn't actually everybody just throwing in the towel at the moment. I think that's a counter trend idea. Remember, counter trend ones are tough. Ameriprise, good reversal off the 200-day. I don't know, I like that sort of thing. Got a nice pullback. Here's one that didn't pull back and stop. It's pulled back and started to rally, right? So we'll see what happens going forward there. Also a financial stock, so they had a good day. Ross Stores pulled back today 3%. So a little extended in the short term, not as much buying here. This one's going to be a little tougher for the counter trend traders because they have a majority of their stores down here in the South. 68% of all their stores are in the South or are in hotspot states at the moment. So Ross Stores may be kind of out of favor. It's more, you'd call it like a scalp or a short-term look to see if maybe it just bounces over the real short term. That's all I got for you as far as that goes. I'll cover a few stocks, then I'll get out of your way. Nike earnings. So stock was higher today, got to 101.40. That's not going to do it. It's going to open lower tomorrow. Down, earnings missed by 51 cents. Let me see if I can find some more info on this one. Earnings down 51 cents. We were expecting 7 cents. That's a big miss there. Revenue missed as well. Ooh, not good. 90% of their stores, they said, were closed in this quarter. So, hey, give us a break. You know, most of our stores were closed. Let's go to digital sales if I can find it. Digital sales up 75% in dollar terms. So that's good. That's what we talked about the other day, that would be a focus. That's actually good news. So not too bad there. Oh, gross margin. There you go. Gross margins dipped to 37% from 43%. And I don't see a reason why. Oh, they shipped less to their wholesalers. So not an issue of demand, just some wholesalers, I guess, were just saying, no, we don't know if that stuff's got the virus on it. We're not sure if we want to participate in that. So Nike looks a little bit lower here after hours, at least at the moment. Peloton up 4.5% today. Stay-at-home stocks, right? They're getting back in favor. Peloton, Zoom, these are all very extended stocks overall, so something to keep in mind, but those saw some moves today. Beyond Meat's down 4%, which is a lot better than it was. McDonald's has reached the end of their trial and has decided not to continue, at least at the moment. The CEO of Beyond Meat said, yeah, it was a trial. The trial ended, and everything's cool. No, come on. That's a nice way to say it, but yeah, good job. BlackBerry down 1.4%. Yeah, they still exist. BlackBerry beat on earnings, and they said, we actually see signs of a recovery, which is good. I think they've said that every single quarter for the foreseeable, for as long as I can remember, every time we've covered it. Uber actually finished positive on the day. Uber and Lyft are going through that thing where California wants them to count the drivers as employees. Doesn't matter where you stand on that. It's going to be a market mover in general. And then the question is, what does that mean for names like Grubhub? Oops, like Grubhub, DoorDash, right? Are those stocks, that's going to have to be the same thing? DoorDash, Uber Eats, all that. I mean, I get it. But I don't know. I think that's something you got to keep in mind. Watch how that progresses if you're looking at that sort of thing. Okay, last couple things here. You got FedEx. FedEx paying out 65 cents in earnings there. A lot of changes in the S&P 400, S&P 600. There's been a lot over the week there. So maybe something to take a look at. And National Beverage is going to have earnings. Boy, I bet you they're happy to be out of the news there. Very active in the options market right now for National Beverage if you... ticker symbol Fizz, if you happen to be looking there. I'll take a second here, try to answer some of your questions, and then we'll get out of your way. We'll see what happens. Gold. I saw that. Yeah, they recommended gold. Hey, momentum, right? There's nothing wrong with a trade. You got to just kind of pay attention. Were they talking about a trade or long-term investment? I was focused on long-term investing, but as a trade, you can't argue the momentum clearly building in gold. I've highlighted that in terms of the dollars moving into gold. People are certainly very interested in that one lately. Yeah. You like the idea of Square moving higher? You thought yeah. It always kind of flatters me, or not flatters me. It just sort of shocks me every quarter. I don't look at it otherwise for the most part. So when I see they have earnings, I'm like, BB. What? Sounds familiar. Used to be BBRY, and I forget why they changed. Yep. What caused the bullish rally in the last hour? No news. You have to attribute it to short covering, dip buying, something like that. There was nothing in particular. Yep. Thoughts on the rise of the retail investor? There are more of them right now, given that we're sitting at home Doesn't seem similar to cause the Great Depression and dot-com bubble to burst. There's always a level of retail investors. The issue, and you're being tracked, by the way. Everybody knows exactly how many dollars on average per account, median account size, all that stuff. It's all being tracked. It's just not a lot compared to the money that moves in other accounts. So, I mean, it may account for volatility, but it's not like retail traders are going to move too many individual stocks. It's just too tough. Remember, everybody that buys an index fund, that index fund has to go buy the stocks. So there's always this fascinating thing in my head where someone's buying an index fund, but they're shorting Apple or Microsoft or whatever they're doing, or they're selling shares of Microsoft. Well, that's the same thing. You guys are essentially competing against yourself as a net, like, personal balance sheet type equation. That'd probably be a good video there. Yeah. Okay. What are your thoughts on medical properties? So obviously REITs in general, a lot of these have pulled back. Your medical, and I know that's the name of the company, but your medical REITs, medical property type REITs, digital REITs, they've all held up a little bit better. This one sold off a little bit more than the rest. Same thing. It kind of looks like the banks where it pulled back to an uptrend. I think in the short term, you see a little bit of a bounce. I'd be in no hurry to start a new position for like a 3-6 month thing, like you mentioned. I can't tell you what to do, but you know, that's where you stand on that one. Good reversal today, by the way. Yep. Could be index buying in the last little group. It could be. Yeah, could be just dip buying where people said, I don't know, I'm tired of picking stocks. I want to dive back in there. Yeah, that's a tough one. I saw the GNC, by the way. Yep. That's unfortunate. Yeah, I don't know if there's many around here still. It's kind of like Radio Shack. We've got one somewhere. I don't know where it's at. Yeah. Plant-based meat has hit a bit of a speed bump is what you think there. Okay, yeah. No, I mean, it definitely got sort of that one-hit wonder, like in the music industry where somebody has a song that's played so much and gets so much attention that they don't stand a chance on their next song. Had that feel for a while, but it hasn't died off in terms of interest. Yeah. Oh, yeah. REIT stocks like Simon Property, I don't think you want to look, I mean, maybe you do, but I don't think the average person wants to look at the weakest stock they can find in a sector. You would if everything sold off rapidly and you were trying to pick on a short-term bounce. As an investment, I find it hard. If I gave you my money, I'd find it pretty hard to agree with you that you took my money and you bought something that is one of the weakest stocks that's not very volatile, it's not moving, had a brief little pop there. I'd be a little frustrated if you did that. Yeah. Yep. American Airlines. Well, I mean, you can't argue that. I mean, these are all discounted, right? So they've all pulled back. They got a little too far, too fast. I mean, you got to imagine American Airlines has the balance sheet. They've got other issues they're working through, but you got to imagine that these companies, for the most part, are going to be fine. You're seeing this discount at the moment. So I can't say that $13 is the best place to buy it, but, you know, you got to imagine people are attracted to this discount. I wouldn't blame you at all. Yep. I like it. Thoughts on Pfizer? What do you mean in particular? Obviously, it's sold off here in the short term, a little extended in the short term, but I don't know if you mean long-term investment, short-term, dividend-based. I don't know what you're trying to do. Yep. Was there a little hint at a surprise today from President Trump? I did not see that. Yep. American Airlines, a lot of these are in rough shape. I mean, there's no arguing that one. I get you there, but you look at something with a strong balance sheet, compare the balance sheets of the airlines there. They are not all the same, by the way. They're all raising money right now, which also weighs on the stock. Some of them selling off their own shares, and because of that, that's, you know, that's it. I believe the Fed stress tests today were on the larger banks. I think the regional banks come second. I'm not sure. I think that's how they do it, but they're just going to limit the dividends there and some of the other things. So that's unfortunate. That's going to probably hurt them tomorrow. I saw a few of them down after hours. Albertsons, I believe they priced today. They don't launch today. I believe they're going to price today if they have not already. And does my platform even pick it up just yet? Yeah, it picks it up. Thought they priced today. Yeah, priced 18 to 20. They did. Was that today? Yeah, it's not public yet though. It hasn't launched. Win. Yeah, I saw that sell-off there. Win very extended in the short term. Very quick sell-off there. People try. You can see them dipping their toe a little bit today. I agree with that. I would agree. Hey, I think that's about all I got for you. I'm going to get ready for our class here later for our customers, so feel free to join me in the speakeasy if you are with us here at Jazz. grab a drink, come hang out. Let's talk a little bit, have some geeky stuff to share with you. And then we're going to talk about your taxes in the future. Need to get your attention a little bit. So enjoy the rest of your day. I do appreciate you watching, and adios.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours. Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before